And joining me now is Jason Horn from Steyn Capital Management to give us his take on the market's activity. Jason, thanks so much for your time this afternoon. Now, trade has been choppy for most part of the week, with concerns over the US's deepening budget deficit as lawmakers move to pass the tax bill. This, of course, has spurred a sell-off in both US equities and bond markets. Just your analysis on what's been playing out on that front.
Yes, thank you for having me. So last week we saw Moody's downgrade the United States, and we saw yesterday the US come to market to conduct a 20-year bond auction to the tune of about $16 billion. And unfortunately, there was weaker than anticipated demand there. So the bonds were issued at a yield of about 5.1%. which is a significant jump above what they issued at back in April at 4.8%. And post the auction, what we saw was 20-year debt in the US, the yields rose to about 5.13%, which is the highest it's been since November 2023. And as a result, we're really starting to see these fears around debt sustainability in the US come through. And the reality is what markets are really concerned about is this year the US needs to refinance about $9 trillion worth of debt. And if we combine that with the federal deficit of about 1.9 trillion, it means, the government's going to be needing to borrow even more from the market. So you've got all of this, you've got high interest rates, and you've got more supply coming on, which means the outlook for bonds in the US is not fantastic.
And as you mentioned, this really being felt across the globe. We have seen European markets in the red, markets here at home also in the red. How much of the downbeat sentiment here at home is on the back of what we're seeing playing out in the US, and how much of it is also because of what we've seen play out here at home? I mean, we had Budget 3.0 yesterday. We also had President Ramaphosa have a sit down with President Trump.
Yes, well, I think if we look at the South Africa specific news, I would say the sell-off is more to do with what's going on in the US and the global markets. I mean, if we look at price action yesterday, once Budget 3.0 came out, fairly middle of the road, pretty well telegraphed budget. I think the reality is the fact that we had both Cyril Ramaphosa and John Steyn in the US together, and including the commentary from John Steyn last week, Cabinet approving the budget, kind of had a sense that there was going to be no political landmines, for lack of a better term, within the budget. And on the political front, chatting with Trump, also again, not a fantastic outcome, not a terrible outcome. I guess markets fearing call it a Zelensky moment from that meeting a couple months ago, whereas it was fairly as expected, where we had the usual commentary from Trump around the issues he's citing in South Africa, and Cyril Ramaphosa being very diplomatic about it in his responses, and coming out to say post the meeting that there have been some positive discussions with the US.
All right, let's move over to some company news. Investec out with annual numbers today. That performance seems upbeat. We saw strong net inflows coming through, revenue also ticking up 5%. What have you made of those numbers, Jason?
Absolutely correct. I mean, very well guided results, so not much of a surprise given the pre-close guidance that we saw. I guess one of the real things to draw out from here is that the buyback of 2.5 billion rand over the next 12 months seems to be spurring markets on somewhat around this, but overall, pretty good performance operation.
Life Healthcare, in the meantime, also delivering upbeat numbers, Jason. Earnings up 9%, partially on the back of contributions from acquisitions concluded in 2024. When the group released its trading update, I think around April, I spoke to an analyst and she brought up something interesting, raising concerns around, Life Healthcare's future growth prospects, considering that they've sold both AMD as well as Life Molecular. Is Life a company you're looking at, and are these concerns warranted?
Look, not a company we've been looking at of late, but I mean, digging into the numbers, kind of what they are reporting, again, well-guided results from management, in line with guidance, executing on what they said they were going to, looking at the LMI transaction, looking to close in H2 this year. Good increase in the dividend per share. So I can see a lot to take out for investors here, but from our perspective, it's not one on our radar at this stage.
Let's hit pause on that conversation, Jason. Before we move on to your stock pick, let's take a moment to touch on some counters that have been attracting interest from your industry peers.
It's an investment fund. It's listed in London. They've been going for 116 years with the same philosophy. They have about 25% in things that are not listed, and otherwise they're always looking for the next best thing. They've got about 100 different companies in their portfolio, but focused on what they perceive as value going forward. Currently that's focused, and I'm going to read off here because, it's first of all, autonomous technology, robocars, that kind of thing. The people that make AI stuff, NVIDIA, for example, the people that apply it, in other words, digitization of money, and also AI infrastructure, as I said, the implants themselves. Go and take a look at their track record. It's absolutely brilliant.
They've come under such pressure because of breakup, from competition commission type issues in America, and the fact that they were going to break up, and I think listening to Sundar Pichai, I hope I pronounced that correct. I like where they're going in search, with very much an AI focus. I see the shares have actually picked up today about 4 or 5%, but I think don't dismiss them. They've kind of been brushed aside against all the others, but this is a smart company, and smart management as well.
David going with Alphabet, and Rick is picking Scottish Mortgage. Jason, what are your analysis on those counters?
Look, well, Alphabet is a fantastic business, high quality business. I mean, it's a company that's followed by hundreds of analysts, and it's something we find it hard to understand how you can generate an edge in it. But Scottish Mortgage, on the other hand, may be interesting in terms of the types of underlying businesses within the investment company. The reality is it trades at only around a 12% discount to NAV. And to be honest with you, we don't get out of bed for a 12% discount. As emerging and frontier market specialists, these types of investment businesses trading at large discounts to their NAV are not uncommon, but the difference is the opportunity set that we see are more in the range of, say, 40 to 50% discount to NAV.
All right, let's get your stock pick. Where are you seeing opportunity at the moment?
Yeah, the stock we've picked is Georgia Capital, a London-listed business. It's an investment holding company with fantastic underlying businesses, and it's trading at greater than 50% discount to NAV. These businesses include a significant stake in the largest bank in Georgia, largest retail pharmacy network, biggest hospital group, as well as the largest insurer and private education businesses within Georgia. It's growing its NAV by over 15% per annum for the last 7 years, and they are buying stock back hand over fist. I mean, they've actually been able to reduce their share count by over 20% in the last 5 years, and with the aim to buy back another 10% in the medium term. And here's the real kicker. The senior management team earn zero salary and are only paid in deferred shares. And to tell you the truth, this is the kind of investment that we get out of bed for.
All right then, Jason, thanks so much for your time and sharing your insights of trade at midday. That was Jason Horn from Steyn Capital Management.